Well, loan growth is back with a bang for the banking sector. Now, banks have seen a strong growth of over 4% till the 1st of July in terms of quarter on quarter, and this is the highest sequential growth for the period of Q1 in last 12 years. Now, take a look at the historical loan growth. It shows that the sector recorded negative quarter on quarter growth in the past 3 fiscals in this period, that is Q1. So, in terms of absolute value as well, the loans this year or this time around have seen the highest Q1 increase over Q4 increase in the last 13 years. The incremental credit growth in Q1 FY23 on a sequential basis has been about 4.91 lakh crore. Now, this compares to an incremental loan of about 9.4 lakh crore that we saw the growth in the full fiscal of 2022. So, on the back of robust demand that you are seeing across sectors, despite the fact that capex demand is yet to take off, this number is pretty impressive. On a sequential fortnightly basis, the total credit growth was about 1.91%. This saw a food credit growth declining by 14.1% and non-food credit growth of about 2% on a fortnightly basis. Even deposits have been building well. Deposits grew by 2.4% on an overall basis, on a fortnightly basis, that is, with demand deposit growth of 5.3% and time deposit growth of nearly about 2%. On a YY basis, we have seen an advances growth of 13.3% for the latest fortnight. This compares to about 12.1% growth that you saw in the fortnight of June 17th on a YY basis. So, YOY or year on year, the food credit is however down by 55% and non-food credit growth has picked up to about 13.8%. Growth in deposits have also picked up, which is at about 9.8% year on year for the latest fortnight. This compares to about 8.3% growth that you saw for the fortnight ending 17 June 2022. So, given the steady growth in both credit and deposit, the CD ratio as we call, or the credit deposit ratio, has remained almost static at 73%, which compares to about 70.75% on a YY basis, and in the previous fortnight it was around 73.3%. So, therefore, as things stand, barring any impact of a global slowdown, Indian credit and deposit growth or the business growth of the banking sector looks robust, and that's good news for the banking sector.